Today we are looking at XVS, Venus Cryptocurrency Analysis and Prediction. Welcome back to Crypto Cash, your one-stop shop for cryptocurrency analysis. Before we take a look at XVS, please consider subscribing to get notified as soon as these videos are released. This gives you a head start so you can effectively plan out your trades and make an informed decision. I have years of trading experience, and my goal here is to share my knowledge with the world, so thank you very much for tuning in. I always start off with the fundamentals and dive deeper into the technical data. I also provide you with action plans for the future so you know what I would do in each scenario as a day trader and a swing trader. So be sure to stick around to the end so you can get my recommendations. Please note also, this is not financial advice. This video is designed for educational purposes only. Now let's get started with the fundamentals. Venus is an algorithmic money market and synthetic stablecoin protocol launched exclusively on the Binance Smart Chain, BSC. The protocol introduces a simple to use crypto asset lending and borrowing solution to the decentralized finance DeFi ecosystem, enabling users to directly borrow against collateral at high speeds while not losing transaction fees. The max supply is 30 million, circulating supply is at 31% of its total. Today's high is $92.30. Today's low was $60.38. It's an overall daily change of approximately 30%. The 52-week high is $92.30, and the 52-week low is $1.16. Now, the price of Venus has changed dramatically over the past 2.5 months. The price has increased over 100% in the past 4 weeks alone, and just spiked over 30% today. This currency is fantastic for day traders and swing traders alike because of the volume and volatility. Resistance level is currently at $92.30. However, this might change depending on what happens soon because, of course, it is making higher highs right now at this point. Support level is $76. And now for the technical analysis. For my day traders out there, looking at the 15-minute chart, both the 50 and 100-day moving averages are potential support levels. They were previous resistance levels before the price shot up again recently, and the RSI is overextended at approximately 90, so be cautious if you're going long. Same is said with the MACD. It's also very much near its peak. The VWAP is likely the best indicator here because it's holding as a support level. Just bear in mind it's a little overextended right now, so expect the price to correct itself soon. So if there is, so here's what I would do if I were planning on day trading. If I were to consider a long position, I would wait until 30 minutes after the VWAP is tested to see how it reacts to the price action. I would also wait for the RSI to calm down at least somewhere under 70. If these two things occur, I would start with a small position of maybe 30% and would wait for another signal to add to my position. Another signal would be, something along the lines of two 15-minute green bars. Something like that is usually a very good indication, in my opinion. Once this happens, I would add to the rest of my position and look for an exit point. If the RSA hits 80 or 85, I would sell half my position at that time, and then the rest in smaller increments as I get closer to my goal. Now, if I was feeling bearish, I would wait at least 15 minutes after the resistance level of 92.29 is tested to see if it's still respecting this level. In that situation, I would open a short trade position as close as possible to the resistance level. I would also identify the RSI as not oversold and pay close attention to the moving average, convergence divergence, the MACD, to glance at the direction it's heading. I would also average down and sell in approximately 5 different transactions. For my swing traders out there, taking a look at the 4-hour chart, you can see the moving averages don't really matter at this point. However, they might become relevant in the next couple of trading weeks, so be mindful of how the price action reacts essentially to the 50-day moving average first. Also bear in mind the momentum of the MACD. It appears it hasn't reached its peak yet. The RSI is oversold at 80. This is not a good technical sign for a long position. Always bear in mind you need at least 2 indicators before making an entry. And when I say entry, I'm referring to maybe a 25 or 50% initial position at best. Now in this situation as a swing trader, I would plan to do one of two things. First, I would use a 50-minute chart to identify if the currency is still respecting support levels, maybe created by the 50-day moving average and the VWAP. Now the 50-day moving average is a little ways off, so the VWAP would probably be the best indicator for an entry point. With the VWAP, you always want to ensure the price isn't overextended. In other words, if the VWAP line hasn't caught up to the price, it could reverse on you. I'd also look at the RSI, and if it's under 70, I would consider a long position, but only after the resistance level of 92.29 is broken. It needs to hold it for at least two 15-minute green bars. I would also only enter with half or a third position. So so if the VWAP doesn't hold, which it can happen, I would essentially have less skin in the game. If I was feeling bearish, I would wait until 15 minutes after to see if it's still respecting the resistance level of 92.29. Then I would add to my position or open maybe a short-term trade position as close to that resistance level as possible. I would also look at the RSI to ensure it's not oversold and just obviously, as usual, identify the MACD, its momentum, and see where it's heading. When I short, I always take small positions, maybe right around 20% at a time. This ensures I'm always profitable. Some people don't love this idea, but I think it's fantastic. It's worked great for me because I've been burned quite a few times going all in. You're always going to hear me recommend this. Never go all in unless you're holding on for dear life. And that's okay if you do, because there's nothing wrong with buying something and hoping years down the road you can sell it for a lot more. That's very, very normal in this industry, as a matter of fact. Just be very careful going all in on swing positions or day trading positions. Last but not least, you'll hear me say this time and time again. I cannot stress this enough. Make sure you set a target, and if you don't hit your target, get out and take your profits. The key to being a profitable trader is to survive to trade another day. And if you found benefit from this content, please like and subscribe, and let me know your thoughts if there's anything else I can do to improve your trading experience. Feel free to contact me on Telegram, Instagram, or Twitter. Links are in the description below. Also, comment below and let me know what positions you're holding and if there's anything else you want for us to cover. Is there any other currency you would like for me to analyze? Comment below so we can all learn and grow together by building your wealth. Thank you so much for watching. We'll go ahead and see you again soon.